What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you what stocks I am watching in the week ahead, as well as how I feel about the economic conditions surrounding the market. So without any further ado, let's jump right in. Okay, so when it comes to the NASDAQ, it was not a good week. We actually had 4 out of 5 red days this week, so the NASDAQ fell pretty dramatically. Same thing with the S&P 500, not a great week at all. And in the Dow Jones, the pattern basically continued. So the entire market overall sold off this week. It was not a good week in any way. The market is going to be closed on Monday, but on Tuesday, it's going to be really important to see, do we open green? Do we open red? Does this pain continue? Or what is going to be the new direction of the market? Personally, I think we're probably going to come down a little bit lower, possibly to the previous lows that we saw in the S&P 500 and the NASDAQ and the Dow Jones, but only time is going to tell. We're kind of at that inflection point right now. Now, when it comes to cryptocurrency, Bitcoin has also taken a big hit over the last kind of 2 to 3 weeks. You'll notice that when the market sells off, Bitcoin definitely sells off. But when the market rallies, Bitcoin hasn't been rallying nearly as much. So it's an interesting dynamic and it's an interesting connection that we're seeing between the crypto markets and the regular stock market. They're not completely connected, but there's definitely a strong correlation. Now, when it comes to earnings this week, like I said, Monday is going to be closed for the markets. On Tuesday, we don't have a whole lot going on, but on Wednesday, we have NEO and GameStop, Fuel Cell Energy and DocuSign on Thursday, and then a couple of companies here on Friday. Not a massive earnings week, but there is a lot going on in kind of the global overall economic conditions that we should just have a brief chat about. So first thing here is high interest rates and rising interest rates. They're probably not going to stop going up for the foreseeable future, and they may even accelerate, especially if we start to see some bad or worse inflation data. Jerome Powell did a conference last week. He said basically we're not slowing down and we're not going to stop early. So I expect rates to continue to rise. That is going to be not great for the real estate industry. It's not going to be great for people that are borrowing a lot of debt. It's not going to be great for companies that have weak balance sheets. So those are some of the dynamics you should think about there. The reason they are raising interest rates is because currently we have very high inflation. Canada and the United States are at like 7 and 8% inflation, which is much, much higher than what we want to be. The target is usually around 2%. We are also having some global issues. China's economy is having some major issues with their real estate industry because it's basically formed a bubble where people are selling real estate that isn't yet built and then using that unbuilt real estate to leverage more debt to start a new project, and it's just an absolute nightmare. It should have never gotten to that point, but China is really struggling with that right now. We are also seeing the impacts of the Russia and Ukraine conflict really start to hit some places, such in Europe, where the oil and gas prices are absolutely skyrocketing right now because Russia is usually the main supplier there, and because of all of the basically turmoil and tariffs and annexes and different things that are limiting transport and commerce there, nothing is getting to Europe, and it's really causing some issues for a lot of people that rely on that oil and gas from Russia. Now, last week I said you may want to take a consideration of shorting the real estate market. This is the direction that I sent you. It was the Direxion Real Estate Bear 3X ETF. It's basically an inverse ETF that when real estate goes down, this ETF should go up. This is the chart that I showed you last week, and this week we saw a nice beautiful breakout with some pretty good gains here, around 10%. So a nice week for this kind of trade. Unfortunately, it means that real estate in general has lost value in the last week, but so has the entire market. So it's just par for the course. What I'm trying to do here is just show you a couple of different strategies for how you can make money when things sell off. I have a couple of videos about that as well on my YouTube channel, so definitely check that out if you're interested. A couple of stocks that I'm looking to buy though, because I think we could be close to the bottom and I think there is an opportunity here. Shopify is one of them that I'm watching really closely. Now, the next couple of companies here that I'm talking about, I'm considering buying them. However, if the general and overall market just continues to sell off next week, I'm not going to be buying anything because everything's just going to keep dropping lower and lower and lower, and it's not going to be a great trade. However, if we start to see Tuesday opens green, Wednesday there's a slight increase, that is when I would start to look at considering getting into these positions. Now, Shopify is really interesting to me because at $30 here, it looks like we've bounced off this level like 3, 4, 5 times already. We're currently trading at $30 right here. The stock is at an 8.1 price to sales ratio, which is actually really good for a company growing this fast in this industry. So I really like that. I think there's just a great risk to reward here. You can buy in at $30, $31, $32 put a stop loss at $28 or $29, and ride it all the way up to at least $38 or $40. Now the next company here is Intuit. This is a software company. They do things like TurboTax and QuickBooks. I'm a customer of them. I have QuickBooks. I use a lot of their softwares. I really like the company. It's a great business model, and I like what they're doing. They're also growing fairly well, which is really, really nice. And we saw a breakout here of resistance at 420. We ran all the way up to almost $500 here, and now it looks like we're coming back down to test this 420 level. So what I'm looking for here is for support to kick in next week. I want to see a bit of a volume increase here. I want to see us trade sideways for maybe a day or two and then start to move back up in the bullish direction. If that happens, I'm probably going to take a small swing trade on Intuit with, again, a stop loss probably around 415 or 410. And what's really interesting about this price chart is that Amazon actually looks very similar. So this is the Amazon price chart. As you can see, we ran into some resistance right here around 125. We got rejected in June. We got rejected again at the end of July, and then we broke through, ran up to about 145 right here. Now we are coming back down to retest this 125 level. And so if we see the market start to go back up, I think Amazon, Intuit, and Shopify are going to be really nice plays for just quick little bounce swing trades off of support with a tight stop loss. I think it's a great opportunity. Now, a couple of dividend plays. I'm slowly building out a dividend portfolio in my RRSP, and these are some of the companies that I'm looking at right now. So Brookfield Renewables, BEP in the US or BEPC in Canada, currently paying a 3.15% dividend with a 52% payout ratio. They're a renewable energy operator with long-term dividend growth, which is what I would be looking for in that portfolio. So I'm considering adding this company here. I either want to see the stock come back down and test this kind of support level and bounce back up to this $56, $60 level. That'd be my prime entry here. Or if the stock just turns around right away and it breaks through 60, that would also be another good entry here. I like this company because I think renewables are going to be a bigger and bigger focus over the next 5 to 10 years. They are an operator that is just focused on steady cash flow. They're profitable and they're paying out a dividend, which is everything I would be looking for a position like that in my long-term RRSP dividend portfolio. Now, the last one here is Power Corp of Canada. Similar profile here. I'm looking for a long-term dividend play. This one, unfortunately, is only available in Canada, so if you're in the US, you'd have to convert your money, but they are paying a 5.88% dividend with a 56% payout ratio. They're an insurance company primarily, but they do a bunch of different stuff, and they're also a major investor in Wealthsimple, so they're starting to diversify that investment portfolio a little bit. Very steady dividend, slowly increasing, very safe dividend as well, and it's given a great yield, so I really like this stock right now. Alright, now if you're interested in a little bit of free money, Newton is giving away $25 in free crypto if you open an account and deposit $100, and if you're looking to day trade, swing trade, or open an investment account, I personally use Questrade. That's where I get all of these charts from. There's a link down below that will give you $50 in free commission, so definitely check that out. If you're interested in learning more about how to invest your money, get started in the stock market, and read these charts, definitely consider my course down below. It is completely free. It's called Stock Market Fundamentals. It's hosted on Skillshare, and when you use that link, you get 1 month of free access to the entire Skillshare platform. You get access to my 10-hour course that has over 14,000 students. It has over 400 reviews in it, and over 2 million minutes of watch time have been spent on that course. It is hosted on Skillshare. It's called Stock Market Fundamentals. The link is in the description down below. And thank you so much for watching this video. I sincerely appreciate it, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.